Good morning, traders. It is Friday, August 22nd. Taking a look at the markets, we've got equities trading slightly higher this morning. Obviously, there's been some selling pressure over the last several trading sessions coming towards this Jackson Hole meeting today, which will kind of kick off around 10 a.m. Eastern time. Talk about rates, all that stuff. We got NVIDIA also in the news. But when we take a look at the news, it seems all the headlines, well, that's typical news, is usually somewhat bearish and negative. The Wall Streets are worried about NVIDIA results, or people are starting to sell off and get worried about the Jackson Hole speech. Are there going to be interest rate cuts or not? Bondholders obviously want interest rate cuts, so bonds will shoot higher. If bonds start to fall, then we will see, let's just go over here, we'll see the bond market put in a big rally, and it has lots of upside potential going forward. But let's just go back to the equities market and kind of go back to this phase here. Now, if we take a look, the market has been pulling back. Obviously, we've had pullbacks to this pink 20-day moving average, where it tends to find some support. You can see we get into these lime green oversold conditions when we zoom in on the daily chart, but from a 30-minute perspective, a 30-minute chart, we get into these oversold conditions. And so now we're waiting to see if this market's going to get some traction. And of course, it's waiting and pausing for, I think, Jackson Hole to see what's going to happen there, and NVIDIA earnings. We did see some selling last night. If we look at the bottom chart, this was yesterday's regular trading hour session with the volume. And then we have the obviously overnight trading, and then we have pre-market this morning. And where it is, you can see here we did have the market started to sell off, had quite a blip and dip down here. Pretty much all the indices took a hit, more so the Nasdaq and the S&P 500, but it has quickly rebounded from there. This looks like a flush out low. It pierced this low, really ran the stops. I think this had to do with NVIDIA itself. If we go and look at the chart of NVIDIA, it's the only one that actually took a big hit. It fell almost 4% at one point. This spiked down, obviously pulled the indices down, came right back. I don't know, it must have been some big order that just kind of triggered through with in overnight trading. This is the problem with overnight trading, is there's very little liquidity. And if nobody's out there with any buy orders and somebody slams it with a sell order, it doesn't even need to be a big sell order. It can completely crash the price in a stock, and that's what's happened. So the market, we're seeing NVIDIA still down about 1% or so at this point. And again, we're just waiting to see how the markets are going to react. And NVIDIA is definitely, obviously, a powerhouse in terms of which way the market is going to want it to go. Now, news is very difficult to gauge. For example, for NVIDIA, people expect them to beat earnings, and NVIDIA does break their earnings and beat it, and they beat it fairly dramatically, yet NVIDIA prices can still fall sharply on really, really good news. And it's kind of the opposite the market usually moves the opposite way you think. And here we've got a lot of people worried about Jackson Hole. There's been selling going into it. They're worried, rates could start to get cut or whatever it is. And then suddenly the news will come out, which I don't think rates are going to change anytime soon, to be honest myself. I don't see the economy really changing. I think we're still in a transition phase, and I don't think the Fed's going to want to really do much. He's going to just meander with his typical legal wishy-washy comments. And overall, I think, nothing's going to change at this point. It's going to get kicked down the road a little bit, and the markets will rally, and everybody will be like, oh, that was not very eventful. But people get nervous. They sell into it, and they think bad things are going to happen. And then, of course, the market usually will rally when that news comes out. So anyways, we'll just have to see. It's going to be a volatile, probably the next few trading sessions. It's Friday, so people will digest the news over the weekend. And more news will probably come out over the weekend and cause some movements here. Let's touch on the U.S. dollar. U.S. dollar is a good barometer of some big market cycles going on. We had this huge, really high elevated top, and this is usually when people start to really give up on strategies. This is when people start to lose their cool, and they don't know what to do, and they usually jump ship and they make some big investment decisions. We have the same down over here. We talked about this back when it was bottoming. I said this is when everybody starts to really get uncomfortable and uneasy. And of course, they do at these extremes for different reasons. Over here, it was pure FOMO. A lot of people see something happen, then they jump on board. And then, of course, that was a cycle high, and then it goes the opposite direction. Now people are fearful of a falling dollar, giving up on it, and now it is starting to rise, and it has started an uptrend, and it's starting to come to life, especially from a Canadian dollar standpoint. If you're a Canadian, it's actually firming up and moving very nicely to the upside. But we're at this critical junction in the market, and if this does continue to go up longer term, that generally means the stock market is going to probably struggle a little bit, and things are going to get a little bit difficult. But overall, we are seeing the dollar slowly firm up. If we take a look at where money has been flowing recently, in fact, let's just take a look at XLU plus XLV plus XLP. This is utility sector, healthcare, and consumer staples. And let's just zoom in on the most recent price action. We can probably just throw in, QQQ. But the S&P 500 is the same. If we just look at these two and just look at the most recent price action, typically when we see the defensive sectors start to move up and outperform, it's usually a sign that there's a lot of fear creeping into the market. We saw them have a little bit of a pop over here. Eventually the market had a little bit of a reset. But overall, there is some fear in the market. We've been seeing this move higher. And that can be a bullish sign short term. This isn't a very big divergence. We've talked about this before. When there's a huge divergence where the defensive stocks are dramatically outperforming the stock market percentage wise, that's a big red flag. But people are just getting nervous here, moving to the defensive space. We saw the same with gold a couple sessions ago. A little bit of a pop in gold. It was just a one-day move, but we definitely saw stocks go down and gold went up as a defensive play. So again, the market really, when we look at gold, is just trading sideways and the markets are just trying to digest everything. Let's take a quick look over at the VIX. The VIX, we have seen fear creep up. Nothing significant, but there is fear moving up, which is what all the other sectors and the money flows are telling us. And if we take a look at the put-call ratio, we're starting to see more put options being bought. Usually when we see this pop up here, this is where people start to bet on falling prices. Usually the way I see it, and I don't know if this is interpreted right, but it's just the way that I see it and how it unfolds in my mind and through the charts, is typically people sell off their risky stocks because they're scared they're going to fall, which is what we have seen. Tech stocks have gone down. Small caps have pulled back. Once they've dumped their positions because they're scared, then they start to buy put options. It's kind of the last one. Now they got rid of those. Now they're going to buy these leveraged plays, betting on the market falling because they don't hold stocks anymore. And then typically when we see this kind of spike up, that's when we tend to see the stock market put in a bottom and rally, and these put options expire worthless and fall in value because the market actually goes up. So this is kind of a short-term contrarian indicator, and I think we're getting ready for the markets to hopefully find a bottom going forward here. Let's take a quick look at Bitcoin. I've zoomed in on the daily chart. As you can see, Bitcoin has moved down, put in a low, put in a high, has been selling down. It's pretty much the exact same thing we've seen with the NASDAQ. It put in a low, put in a high. It has been moving down. So Bitcoin is still following the stock market. I've talked about this many times. You don't know when it's going to decouple. It can at times, but just because it can at times doesn't mean it's something you should be focusing on trying to catch. That is a very difficult one to do. The key here is to just understand that Bitcoin, once it got added into the futures market, sucked into the financial space. It used to be, the Wild West crypto, and it wasn't attached to the financial system. Now that it's attached in the futures system, the money flows and the panic of investors who buy stocks and futures and all of that stuff now more or less are embedded into the price of Bitcoin. So